Hello, Warriors. How's everyone doing today? Our last day at Forex Analytics for 2020. Okay, so uh, after the breakout in Euro, thank you very much, Arena, Hugo, Sinatra, Kevin. We tested it, held, and we have a continuation move in the Euro. I don't think it's done yet to the upside. And while the dollar is making new lows here, right, finally, we're getting some pretty good divergences on the daily. Look at this between here and here. So, we're approaching one of those fib levels Blake talked about for a couple of weeks. I think around 89.60-ish. I mean, I see his red dotted line here. So I think we're getting close. What I asked myself when the dollar's making new lows, the euro, of course, being a major part of it's making new highs. Cable barely is making new highs. Kiwi is making new highs. And yeah, looks like, and the Aussie has too. Okay. So Amanda was asking me about a potential 3 drive in Kiwi, which on the daily, you could kind of see this being 1, this being 2, and this being 3 up here. And on the daily, it is pretty, perfect. We are, under 70. Oh, thank you, Didier. That's great. What a nice testimonial. Didier saying the best decision I ever made was to join Forex Analytics. You know what? Me too. How about that? Me too. But then when she was asking me about it, if you look at it on a shorter term time frame, you see the RSI is making new highs here with price. So, I mean, it could be it, but it's not ideal because it's confirming. So I'd like to see it do some work, pull back, um, and then attempt another high with the RSI staying under 70, okay, and not confirming the price. All right, okay. Whereas take a look at Aussie, um, the 2 hours a lot weaker on this new high. The daily probably, and the daily looks more like a 2 with divergence. You are getting some divergence on the daily in Euro and on the 4 hour. So we're getting close, just like having nice divergence on the daily and the dollar. I think we're there for, at least some type of bounce. I'm not going to do anything today, although does everyone remember the famous story about George Washington after he chopped down the cherry tree? What did he say? Unlike current politicians. Anyone know? He admitted it. He said, I cannot tell a lie. I chopped down the cherry tree. Yeah. So I cannot tell a lie. I promised myself not to trade yesterday, but when I saw this right here, this new high in NASDAQ right up here on this real strong candle, and I saw this glaring divergence, I broke a promise to myself and took it. I didn't ride the whole move, but got about 60 NASDAQ points out of 100. So I just wanted to let you know I couldn't control myself. And when I saw this type of glaring divergence, I figured, what the heck? It's a nice looking scalping opportunity. I don't think it's the high in NASDAQ because when you look at this, So that was off a 15-minute TF. So you always have to keep in mind what your time frame is. And the smaller the time frame, the lower expectations you should have for the outcome of the trade. So when you look at the NASDAQ on the 2-hour, it actually confirmed. So to me, maybe we'll get an ABC. I don't think this is the high. That's the point, because it confirmed. All right. So, the 15-minute time frame, it was obvious. Just like in Kiwi right now, the daily is pretty obvious, right? Unless it just continues and blows out the RSI highs here while it's doing a little work, but it's not as obvious on the 4. 4 is trying to confirm this candle up here, and the 2 is making new highs. But you could always find a divergence if you go through all the TFs. You have something here on the 1 and the 15-minute. I get a lot of use out of the 15 minutes. So the 15-minute, yeah, you are diverging at this high, and maybe it pulls back, and then we make one more high, and then the next time maybe the 2-hour will be under 70. But 70, well, you're wrong. Even though I'm not supposed to engage you, I have a lot of people that use them. I'm not saying they work all the time, but what was wrong with this divergence? Right here. Right here. So don't tell me they don't work. This was a new high for the move in the NASDAQ with a glaring divergence. Yeah, did. Ask my mentees. Okay, so okay. Anyway, looking at the metals, I think the $600 check, if that's all Congress sends out to people, is actually a little bit deflationary. Okay, so everyone looking for the inflation pop, I think it's going to happen, but maybe not till after April, till the new administration gets in there and puts together some, huge packages. I'm not saying this is huge, but you just ask yourself, if you were unemployed and you're not getting unemployment insurance, or if you are, you're getting $1,200 as an independent contractor, which is 50% of what you need to rent in Southern California. Most rent's about $2,000 or more. What's 600 going to do for you for the next 3 months? Are you going to eat peanut butter and saltines for 3 months and still owe your landlord? It's deflationary. You need the big guns, big bazookas now. So maybe that's what's going to be behind a break. We're seeing it in gold now. One more break in the metals, and actually what could generate a dollar rally. And I still believe before the dollar collapses, and I'm going to leave you with this thought going into New Year's, that as bearish as it looks, and it doesn't look that bearish right here on the 15-minute, look at that. I know some people think it doesn't work, but ignore it at your own peril. And it doesn't have to be, say, for example, you're bearish a dollar. It was okay to stay bearish here, okay? Looking for a new low, looking for a new low. It wasn't okay here, and it's really not okay here, even if you're going to be right for a little bit. And it is my contention that before we have the dollar collapse and it ends up, not being the reserve currency, and they, cut the value of the dollar in half, that there'll be one hell of at least a bear market rally that will come up and challenge. Just look at, we went from 103, let's call it 89, 1,400 points. Halfway back is 96. So I think you're going to be able to short the dollar at 96 sometime in the first quarter. And I also think, and I know this is a little bit nose for Pinkert, that you're going to be able to buy the euro back down under 116. And, I was bullish looking for this terminal thrust. I'm not sure if it's over here in the euro, could be. Full moons. I mainly only trade on full moon. So we had a full moon last night. Maybe the dollar's bottoming on it. But again, I'm going to make myself a promise. I'm not going to take a position until Monday or Tuesday. So, because I already broke one promise to myself, I don't want to be, always lying to myself. And you know what? People lie to themselves to rationalize their mistakes. So, I want to wish everyone a great 2021. Okay, well, you know what? That's trade the trend. Okay, what trend? I do believe in inflection points, and you could trade divergences with the trend. There'll be, get corrections on shorter term time frames, and the correction pattern begins to not confirm and diverge. I agree with you, and I really think that what you guys may want to consider for 2021 to up your game would be to sign up, and our specials start next week. Okay, so invest in yourself and don't be cheap to yourself and think that you probably could just come to face and trade a few things with what we share with you. But if you want to up your game, not be alone for the rest of the market after face is over. And we do have an excellent interview with Peter Campbell today. You want to stick around for this guy. Get ready to sign up at great discounts next week. So go, if you didn't spend all your money on Christmas and you don't blow it all on New Year's Eve and you really are serious about being a trader, I'm really telling you that I've become better. Like, I forgot who said it was a great decision. I've become better in the last 3 years, hanging around with the team and being able to read all the research. I even know a few things about Elliott I didn't know before, and a few things about harmonics I didn't know before. And I've been doing it for, at least 5, 10 years, right? So I continue to learn from the team, and the research is great, especially some of the longer term charts. And then it gives me a bias that I could use my work when it confirms to go with that idea. And if it has made me better, it can make anyone better. Okay, because I, normally am a pretty stubborn fix, old dogs don't learn new tricks. I've learned a few new tricks from the team here. So another point is it's never too late to learn and grow. You could learn and grow at 60 years old, right? I have, and I just want the best for you.
Wow, I grow sideways. I'm glad you're growing.
Well, my waist has grown a little bit.
Yeah, I grow very horizontally now. It's amazing. And good morning, Dale.
Hey, buddy.
Hey, I have my oldest son. He's 16. He grew vertically 4.5 inches this summer. It was amazing. He's actually my height now, which is
that happened to me. I was the shortest guy on the freshman basketball team, and then I had a growth spurt as a junior in high school, and all of a sudden, I could get up to the rim.
It's amazing. It's like
like
I have
beanstalk.
man children living in my home, which is really kind of odd. Anyway,
be nice to him. He might take you down.
One thing I need to mention regarding the the promotional offer that we put out for the new year, which will be coming. And Dale said, as Didier had mentioned that, it's like the best thing that he's done. He's actually in our chat room right now. He had just I'll show you here in a second. This is his last comment. Now we were just joking about a few things here, so just bear with us. But you can see this is in our Forex Analytics chat room. That this is him who just made that comment. But I want to show you. This is our chat room that we have. This is the day before New Year's Eve, and let's see, where did I get up? I got up. Oh no, somewhere around here. Oh, this is it. And I'm just going to show you, and this has been the slowest day probably of the year in our chat room. And you can see just all the chatting that's happened in the last 2 hours. And that's a slow day. And obviously it's, a couple days before our, before New Year. So, and everybody's on holiday too. I mean, that's just bottom line. But the point I wanted to make here is that is part of our community that, that's where you're going to find myself and a lot of the other teammates. You're going to find Amanda in there because she won't speak live on air. So we just, she'd rather be in the chat rooms, which is great. Excuse me. But the other thing is, I want to urge you guys that if you want to try out Forex Analytics, this is the time to do it. You are not going to get the opportunity to try Forex Analytics once we offer our steep discount pricing.
The trial.
So you want to, if you want to take a trial for $1, at least for the next couple of days, or even for a week or so, while the special's going, do it now. Because you get to try the premium version. Even if you decide to go with the light version, you can try the premium version for $1. And then, because when the pricing goes into effect after the first, you can't take a trial. You just have to take the steep discount pricing that we give out. So just wanted to throw that out there. All right, now I'm gonna I don't want to talk anymore about the subscriptions. What I really want to talk about this morning is I want to talk about, obviously the market moving. And Dale pointed out that the dollar yen is actually approaching some pretty key support here. You guys know the 103 to 104 we've been talking about as being support. So here's the dollar yen, approaching support. We have talked a lot about the dollar, its weakness, and we're approaching some pretty key levels. And Dale had mentioned that as well. And I want to mention that we are near the 89.50, which is the 161% extension of the September or August, end of August lows, depending on what day you're depending on what side of the world you happen to live on. And to the highs in September, this is the 161% extension. Very divergent relative strength, which I've been saying for the last, couple weeks, we're probably going to see that 161% extension. But what worries me is that we've hit this pretty key support and we are seeing divergence. So does that tell me I need to be buying the dollar necessarily? No, but if I was short, I'd be a little concerned here, especially given the fact, let's talk about this. This is end of month, obviously end of year. So you're getting some flows that are coming through. What we've read from Barclays and Citibank the last couple of days has been that we're going to see some dollar selling into month end. If you've been in the chat rooms with Forex Analytics, you've already known that. The thing is all the flow doesn't happen today or tomorrow. It's been happening all week. So we've seen this dollar selling come into the market all week long. So the question would be, is there more to be done, or is some of this going to ease off? Is some of the flow is going to ease off? I have to point out the fact that the market is extremely short dollars and extremely long euros, which makes up most of the dollars. So we have to be a little careful here, being predominantly short dollars, especially with positioning as skewed as it is right now. So just keep that in mind. So the dollar index, I'm going to write down 89.50 as being really key support today. Let's get the bias chart up. Dollar Canadian still acts way better than the where's my bias chart? I thought I just pulled that up. Sorry, guys. Oh, there it is. Okay, so I did. It was just running a little slow. Dollar Canadian and dollar Mexican peso still outperformed the Aussie and the Kiwi, and I tweeted that yesterday. Most of you guys already know that, but if you look at just, you know what, I'm gonna come back to that topic here in just a second. Let's write down this support 89.50. That's key. I was just reading another analyst is like, oh, if we close the year below 90, we're going to have a horrible 2021 with the dollar. I agree that there's definitely some dollar, there's definitely dollar bearish momentum, but I'm not in the agreement that, if we close below 90, that's it. You can stick a fork in the dollar. I still think that the dollar's got some downside here, but I do think if you guys have read our 2021 predictions, which I'm not a huge fan of doing that, but I know a lot of people like to read that type of stuff. I do think that we're going to see some risk aversion after the first quarter of this next year. And so the dollar probably will be, it will benefit from that. So that'd be my 2 cents there as far as the dollar goes. But that doesn't mean that the dollar is going to hell in a handbasket either. I'm not in that camp. I do think that today, intraday, let me put this back up. Remember, we filled the gap yesterday right here at 90. I think we have to get back above 90 to take this downside pressure off. But let's also acknowledge that if we get back above 90, that would end up being a false breakdown too. So let's not ignore that either. So 90 is going to be resistance. We are bearish.
Like that.
Dollar. What's that, Dale?
I like that. Having like a warning sign of when things might be changing and negating the breakdown. I think there's some of the best signals.
We're breaking down now, but
yeah.
Dude, there's a lot of time left in today. There's a lot of time left in today and tomorrow too.
I think our guest today, Blake, too, is also going to be addressing the extremes in currencies and talking about it. So, yeah, Peter Campbell's well. You said you used to follow him, MCM.
And these extremes now are going to feed into this market probably more than ever, especially going into next year. I'm not going to sit here and say, oh, today we're going to reverse. This is it. Yeah. This is we don't have any. There isn't any data today that's going to be released that's going to change my mind. I mean, unless the stimulus bill got completely knocked down today, I'm not going to sit here and say there's game-changing data coming out today or something that's really going to change my mind. But I do think that here in the next few weeks, we've got to be on guard for a dollar bounce, at least an aggressive bounce. Will probably give us better places to sell the dollar, which I think closer to 91.50 or 92 is going to be the better place. Which I've always felt that this is going to be. Oh shoot! I didn't want to do that. I didn't mean to move that. This is going to be the place where the dollar is going to be, sold again. Would be up here, all right? Question is how far down do we go before we get that bounce? That's the question.
I don't think much further.
Right?
Just my opinion.
What's that?
I don't think much more than another 50 points, max 100 in the Dixie anyway.
Yeah.
Before a turn.
We'll see. Let's matter of fact, let's look at some of these other charts.
Yeah.
So here's the euro. We talked about yesterday about reaching the 127% extension at 123.10. I still think that is a viable target here. So 123.10.
I saw you had a little arrow on the RSI, buddy.
What's that?
You had a little arrow on the euro chart on the RSI.
See? Yeah, it's this was showing that it's still divergent. Yeah. It is divergent. I mean,
it looks like a 3 is setting up here.
What's that?
A 3. First
Great.
high in December, early December, second high mid-December, and now a third high coming in here. Maybe we get to 23.10 or
Yeah,
23 and a half, but
we
it's a
might.
three.
And
Yeah.
I'll tell you, the euro's not backing off. It's holding up very, very well. What I would probably be looking for here regarding the let me go ahead and for the dollar is now that we're above
Yeah.
this resistance, and you can see that resistance didn't really matter much because we came back down and we slumped right past through it. So I'm not going to even reference that anymore because we might be in what's called an ascending wedge or trying to build out an ascending
yeah.
wedge. But
Yeah.
we'll see if we can't, it just depends if we can't break above this trend line and we can't reach that 127% extension. Now we got to start paying attention to support, not the overnight support. I'd pay closer attention to this 122.35. I know it's far away. Well, it seems far away. But again, you don't know why we could get down there or if we could get down there. And if we do, why we got down there. It's just, it's a number that we should pay attention to. I do think that 123.10 is going to be significant. That's why I'm going to put an asterisk there. Cable, we're struggling again at the 196 or 136, excuse me, level. Now I drew this morning and you can see it's a slight descending trend line. I drew that. If you get Forex Analytics, here's the basic technical analysis. Here's the 1 hour chart. Okay. We were just above we are at 136.15, 13 when I put out this chart, and you can see it actually rejected that trend line here. So, what that means to me now is we do have to pay attention to these highs. These highs are now significant. So 136.25. Oops, 625 is resistance. I want to put it in bullish, but I still think we should keep it in range until we're broken out. It looked very bullish going into Brexit. Like I told you guys last week, I own the cable all through here, and I sold it after the announcement came. And I'm worried that if this dollar bearishness, if we get a little bit of a bounce, it's going to pull the cable back down. So, but that's probably not a concern for today. For today, support's going to be down here. You can see these. This is a very important pivot area. You can see it on the hourly charts. Many tests. It'll take us all the way back to these highs. Let me go back to a 4 hour. There we go. So you can see these highs back here from December of 2019. It's been an important pivot many times. So 135.15 on the way down probably would be, will hold. Especially on a day like today, when it's not super liquid in the market. Okay. Aussie. So as we talked about yesterday, and let's take a look here at our bias chart from yesterday. Yesterday, 76.40, that was important resistance. And I know for a fact we talked about last night, if the Aussie dollar can break higher, we would expect that the 76.75 level to offer strong resistance on a breakout. That's been the last few hours. And we were as high as 76.73. That's 161% extension, folks. Now, remember, this is a long-term 38% retracement. When I say long-term, I'm talking years from 2011 high to the recent lows, it is not uncommon on a monthly or yearly big Fibonacci or support or resistance level. It's not uncommon to overshoot by 20, 30, 50 pips, but in both directions. So let me just show you something. If this is as important as I think it is, here's a monthly chart. There's a monthly chart of the Aussie. This is the 38% retracement. That's where we're at. This whole area right around here is going to offer resistance. You look at it on a monthly chart, you're like, oh yeah, we can bounce on that. That's why support and resistance is not an exact science, because you could be within a 20, 30, 50, 70 pip trading range around that big level. So just because we're 30, 40 pips above that fib level, to me doesn't mean anything other than we are above it. We need to take note of it, but it doesn't mean that, oh, we're breaking out and this is it. Because look, we have this 161% fib of the last several month consolidation that we're testing right now. So my 2 cents is we're probably going to reject here or around here and come back down and be trading between 76 cents and 77 cents for a while. That if I had to guess, right? That doesn't make me right. It just, that's what I would suspect. Okay. So that resistance is at 76.75. And, if you guys want to take a little bit of a counter trend risk, like I did this morning, because I did short the Aussie overnight. You can risk like 25, 30 pips here. I'm just not taking a huge position. Support for the Aussie, I bet you, is right back down here at 76.25 if we make it down there again. Kiwi. Same thing as the Aussie. This is a big 50% retracement, multi-year 50% retracement at 71.50. We are at 71.95. And the 127% extension comes in at 72.16. I had an order to sell it last night at 72.16. But you can see a break above the 71.70 level may put the 72.16 level in view next, which is 127% extension. Daily RSI is still divergent too. And it is still divergent. It is now overbought. So if we make it up to 72.16, probably going to find some sellers up there. You're probably going to find me up there. Support intraday, I bet you, is right back down here at 71.70. All right, 71.50. Oops, that's not what I want to do. 71.70. Just in case we do a little slipping. I do think we're bullish though. Dollar Canadian. So as I pointed out yesterday on Twitter, for those of you that follow me via Twitter, the dollar Canadian is acting really well, considering it is a commodity currency. Oh, crude's slipping. That's one of the reasons why right now. You see crude oil just is slumping right at this moment. Hold on really quick. You guys know I try not to deviate too much because I want to do this analysis for you, but look at crude. Oops.
If you go out a little bit, it almost looks like a head and shoulders formation. If you go out in time, put a 2 hour, 4 hour. Yeah, 4 hour approach.
Yeah, I think we're in this this channel, ascending channel, but we're approaching the 161% extension. We've not been able to scale that. So yeah, I think that crude, I mean, obviously if we start breaking through like 47, 40, 47, this like this area right through here.
Yeah, see, that's little right.
You got to be a little careful being long crude, right?
Yeah, I like that.
And I sit here and I look at the dollar Canadian, and the dollar Canadian's holding the 618 retracement.
Amazing
guys-
relative strength with what the dollar has been doing.
Oh,
Amazing.
it's showing. I mean,
Stronger
if
than
I was short the
USD
dollar
Mex.
Canadian,
It's probably the star, of
yeah,
holding up
actually,
against
let
dollar
me just show
weakness.
you guys something. This is last night. Oh, hold on, give me 1 second. Yesterday. Hold on. I'm just going to show you a brief glimpse of this.
Plus it got
Not saying these guys are wrong, but I want to show you this. This is from yesterday. This is from Citi Tech, right?
Yeah.
I'm not going to read you the whole thing. I mean, you can stop it. You know,
downside
if you
looks
guys are watching a
compelling, that's
recording,
all
you can stop
The
it.
headline says it all.
Yeah. So this came out yesterday from Citi, yesterday afternoon. So that the reason why I point that out is because let's say you got this yesterday afternoon, and you're a Citi client, and by the way, Citi's been they've been on fire as of late. But you got this email yesterday afternoon at like 3:00 in the afternoon,
So
New York
close.
time. And you're like, ooh, I'm going to short the Kiwi, right? And you get short the Kiwi yesterday, somewhere around here. It was trading around 128, somewhere in that neighborhood. So you're short, and you just watch the Aussie hit new trend highs.
Yeah.
You just watch the Kiwi hit new trend highs.
Right.
And then here you got the dollar Canadian that's barely lower, and now you got a reversal in crude. Dude, you're probably thinking, man, I don't know if I really want to be short this thing anymore, right?
Looks corrective.
To me,
Steve Balky would say it's corrective from the high up there.
It is, yeah, and this shows you exactly what happens to the short squeeze in the dollar Canadian.
Yeah, A to B got there in a heartbeat, and the last 3-4 weeks it's just been relieving the overbought condition.
Impulsive, and I know if you're short the dollar Canadian, you're looking at that spike going, I don't want that to happen to me again, or happen to me in general, right? So if you're short dollar Canadian, and I'm, again, what I try to do as a trader is I try to put myself in the shoes of other traders that happen to be trading. But like if I was short, how would I feel about the dollar Canadian right now? Or if I was long, and I try to feel like who is in the driver's seat right now. And if I was short the dollar Canadian from yesterday, because I just read this analysis and I watched the Aussie do what it did, and I watched the Kiwi do what it did, and I see stocks doing what they're doing, and I see crude slipping, I'm probably thinking, oh man, I got, I'm going to tighten my stops at least. So with that being said, support, I don't know if we're going to see those lows again. Well, we could because of the end of the month, but I do think that down here at 127.45, we'll offer support.
They just killed the yen, Blake. We got to break down in that now, don't we?
Yeah, the dollar yen's trying to break down. It's trying to break through that 103. It's trying.
Yeah.
Trying like hell. Resistance. We'll see this previous resistance here, acted as support here, trend line resistance right through here. So that's at 128.30. That should act as resistance today. You guys know I've kept us in a range on the dollar Canadian ever since we came out of this channel, and ever since we respected this 161% extension. So I do think that we're in a larger trading range that looks something like this. Okay. I'm going to put this back here just to keep it up there. Okay. Moving along. Dollar Swiss. So the dollar Swiss is pretty weak. But we hit new trend lows here. Check this out. New trend lows. Previous channel. We respected the channel. We hit the trend line and reversed.
And all the shorts, all the longs are out with their stops being taken out under that low.
Yeah, and we've been targeting this 8805 level forever. Remember, it's a big 161% extension. We had failed to get down there. And I'm like, at some point, we're probably going to test this support. That's pretty damn close.
It's
the
already
few things
above
that
where
close
everyone got
matters.
stopped out.
What's that?
It's already above where everyone got stopped out. At
Probably.
new lows, marginal new lows.
Yeah.
Yeah. They took the stops out of the bottom tickers.
Just in
Love when that
case
happens.
things get a little, squirrely on a short squeeze. I don't
Yeah.
think that that's going to be the case, but look, after hitting new lows, it's possible. I'm not huge on trading the Swiss right now. It's not my cup of tea, but that doesn't mean it won't be. US dollar, Norwegian krona. Matched lows at 855. Resistance is at 870. Oops. It's bearish. US dollar, Mexican peso. Well, look at the dollar mex. We drew this trend line yesterday. Notice how, and Stelios came in the chat room earlier and he's like, this is compelling. False breakdown. This is Stelios came in and put this in the chat room. But, as a Forex Analytics subscriber, here's the dollar Mexican peso 2 hours ago. We were trading at 1984. Now we're at 1988. So, the bounce is already taking place off of that trend line. So that means support is 1980, resistance is 2010. And the real resistance for all of us is 2020. Oh, get it? Get it, Dale? Get it? Oh, that was good.
Nice.
Hey, Stelios, good morning. Yeah, so Stelios jumped in the chat room earlier this morning and he's like, hey man, that's a false breakdown. And that was 300-400 pips ago or so. Well done, Stelios. Oh, here, in case you guys want to see.
Just like
that.
Swiss.
You know what they say about the broken clock?
Yep, that's right. It's wrong 14 times a day. What? I'm just kidding. Look, see, this is what Stelios put out. Said, hey, looks kind of compelling. And then, that's what we do in the chat room. We chat.
So one of the most important things to learn is a market not following through from a breakout or breakdown.
Oh yeah,
Don't you think?
Yeah, it's one of those things that you catch when you catch the market wrong-footed. It's awesome. It sucks when it happens to you, but it's awesome when it happens and you can see it, right?
Yeah. When all the people that were looking for that move, there was one more jiggle to shake them out, and then it goes without them.
And everybody knows I put us in the range category when we broke out of this descending wedge, and you can see what happens in a short squeeze in the dollar max. This is what happens, which no one wants to be caught in that. I mean, we went from 1980 to 2070 in literally one day. I mean, that is a squeeze that will take you out of the business if you're too leveraged up against that, right? No one wants that to happen to them. So, and I do think, like the dollar Canadian, we're in a big, that's not what I want. We're in a big trading range now. That's what I think about the dollar max. Everybody that, been listening here knows that. Okay, so let's finish up with dollar yen is at 103 support, but we'll have to write. I can't write down 103 since we're there right now. We'll have to write down 102. 85. You guys know I'm not even trading this thing because I don't want to. It's very annoying. Yeah, 103.90 is resistance. You guys can have fun trading it. I know I tell you that every day. It is bearish. Well, you guys remember me saying it's bearish while we're below this trend line here. You know, we have to get above 104.25 in order for that to turn, you know, any resemblance of a squeeze. But right now it's still heavy. Gold and the S&P. So the S&P continues higher. We you know, we have this ascending wedge right here that we've been kind of talking about, but this right here is channel resistance, just in case we continue to rally, which would take us to 3,800. And you guys know I'm bullish. Like I say it every day, as long as we're above 3,600. And right now, you know, we have to stay above 3650, but we're not going to see that today. 37, I don't think we'll see it. Anyway, 3715 is probably intraday support in case we sell off a little bit. Who am I kidding? That doesn't happen. Gold, same crap as yesterday, minor trend line. I mean, gold's doing nothing. 1900, 1870. I think that's what we wrote down yesterday. You guys can have fun with that one too. All right, we're in a range. So there's your bias chart. It is finished. Good morning, Stelios. Good morning, Steve, if Steve's here.
Good morning.
Good morning. And Dale?
Yes.
We did it.
Yeah.
We did it again.
Good job. Some nice looks, Blake.
Good morning, Blake.
Hey, good morning, Steve. How are you?
Good, mate. How have you been?
Good. Just wrapping up analysis. Not a whole lot going on. I mean, I should take that back. I mean, the dollar's weak, you guys, as we all know. But we still see the divergence in the dollar Mexican peso and the dollar Canadian. What do you guys make of that? You know, I wonder if this is a North America phenomenon. You know, well, I don't know. You guys get what I'm saying, though, right?
Yeah.
I mean, you can clearly see the divergence between, and we're talking commodity currencies like the Aussie, the Kiwi, the Canadian, the peso. I don't understand why we're seeing such divergence there. You guys have any ideas?
Relative strength in Canada compared to the other commodity
I've
currencies.
said so many times before, I don't trust moves at the end of the year. So I have no comment to make. I don't know if Steve has something to.
I just think that as momentum is, clearly somewhat stalling, it's normal to start developing, some divergences. When momentum is very strong, it's unlikely that you're going to find divergences. When momentum starts slowing down, then is where you get divergences. Now, eventually, I believe that these divergences are going to be confirmed, but by some kind of a catalyst that's going to produce some kind of a rally for the dollar. But as we've said multiple times in the recent past, I think that eventually that rally, is going to have to be solved.
Yeah.
Maybe they're smelling a little risk off coming in for next year. Like, the S&Ps, I know a lot of guys have targets over 4,000. And, we're almost got to that 3,800 level. I mean, it wouldn't be, just a 10% pullback to 3,400 is not the end of the world, but I think that could be a pretty good catalyst. Maybe that's what Canada's saying. And
yeah, I mean, could you imagine seeing what the short squeeze would look like on a 10% move in equities in the dollar and against some of these currencies? I mean, the Aussie would probably be back at 72 cents and the dollar Canadian would be back at 131 or 130, 132, 133.
What do you think, Steve? A 2018 repeat where, we finished the 2017 very strong, and then, within a couple weeks, we had that big break in 2018 in January, I believe, right? Will?
I think it is actually likely. What the answer the question I can still answer, and I mentioned that yesterday, is that will some type of a blow-off rally precede such a
Yeah.
reversal or not? That's what what I'm curious to find out, because I think
Yeah.
it's not out of the question.
Yeah, I agree with that. And one of the things that I think we have to really keep in mind, there's not one bank, not one out there that is not expecting dollar weakness into 2021 and expecting a reflation trade. That is the consensus of consensus trades right now.
Yeah.
And it doesn't necessarily pay to be contrarian right now.
Well, if they're a quarter early, Blake, maybe that happens in April.
I actually think that's probably more likely. Like
that's what I'm thinking too.
The dollar continue to bleed, through February or through, January, February before we start to see some sort of reversal. But I believe the consensus, you have to start thinking contrarian when everybody thinks one thing. And right now, everybody believes that the dollar will continue to be weak. The euro may see 125 before that happens, which I think is a realistic expectation. But we're going to have our antenna up. We're going to have our radar on. I don't have to keep the gaydar on because I got Stelios here. Just kidding. It's okay. and it's all right, Stelios, that you're that way. Just kidding. Hey, you know what? Sometimes this is tradertainment. You guys got to laugh a little bit too. And
very true.
One of my best friends is gay. So it's just but we're gonna keep our radar.
But my wife doesn't know about it.
But we're gonna keep our radar up for a possible reversal in the dollar in the coming weeks and months ahead. That's I would say weeks ahead, and I think it's important to do that. It's very, very dangerous to be lax, and when you have a consensus going in one direction. Anyway, all right, guys, I'm going to pass it over to you. So you guys have a great one. I'll see the rest of you on the daily roundup webinar. So thanks, everyone.
I may not see you, Blake. I want to wish you and your family a happy new year, and I hope that this is your best year ever in every way.
Thank you, Dale. And we appreciate you every single day, and we hope that 2021 brings you much prosperity.
All right, and that's to our whole community and to my Stelios' friends and the rest of the team.
Same goes to you.
We really are a great family.
Love you, Coach. You know that.
Yeah, buddy. All right, so I'm wiping a tear from my eye.
Give me a second to bring the tissues. That's what I was. And we'll start right after.
It's great to be part of this team, and it's great to be here, and it's great to have you all watching and interacting with us. So, thank you, everybody, for the support. Okay.
So Stel,
we have 5 minutes.
What do we have?
To discuss very, very little. We had. There's this fight within the Senate about is it going to be $600 checks? Is it going to be $2,000? The Republicans as we all know, rejected anything more than $600. But then Donald Trump, their leader, said, no, I want $2,000. Now Mitch McConnell blocked an attempt to raise it. It's like, it's going to get
Bernie
done.
Sanders is going to filibuster or something because
it's going to get done. Is it going to get done in 1 step, in 2 steps, in 5 steps? Is it going to be done for a month or 6 months? It doesn't matter.
So dysfunctional.
It is, yeah. And I think that the people need it, and the country
reminds me of my family.
If you ask me as an outsider, it looks like an amazing charade to me, because I was really wondering for years now, and I've expressed it openly here on the webinar, how exactly are Republicans going to go back now in trying to play the card that
fiscal
conservatism.
Yeah.
Yes. I mean, during the 4 years of Donald Trump, the US debt will have increased by more than it did in 8 years of Obama.
Yeah.
And we all know how much the 8 years of Obama increased the debt.
So did golf time by a president.
So how exactly can they now really play the fiscal conservatism paper? And you all know that personally, I believe that everybody should turn to being fiscally conservative before everything just, before the wheels, fall off the bus and, it's bye-bye then. But in all honesty, once you've actually done politics the way they've done during the past 4 years, it's just hypocrisy.
The whole point is for the wheels to come off the bus under somebody else's watch and not yours. That's the whole point. Anyway, it's.
I think that Amira, I'm just guessing that he might be interested in your view on platinum in capital letters.
Yeah.
Huh?
Okay.
And platinum.
Yeah, platinum. It's like you call the ruble the rubble.
Yeah. So
the Russian rubble. It makes me think of the Flintstones, which you don't probably remember. Barney Rubble. Anyway.
Okay, we can have a look at that. I mean, I wasn't going to say much more. I only had one more thing, which I read on Bloomberg, and it was interesting about the deaths in the U.S. 100,000 deaths in May, 200,000 4 months later, 300,000 3 months later, 400,000 1 month later. So unfortunately, the pace is picking up. But the good thing is that the vaccines are getting rolled out. So theoretically, this
it's very slow, very slow. Really not. He did a good job on pushing the pharmaceutical companies, but there's no infrastructure for.
Yeah, of course. I mean, there was no precedence.
Yeah.
Of that. I mean, having to develop literally hundreds and hundreds of millions of vaccine doses in like zero time. It's, no company had such an infrastructure, right?
It's unprecedented.
Yeah, but no one, it's the dispensing of the vaccine. They're leaving it up to the states instead of having, what's been missing during our COVID response has been leadership at the federal level. Like you guys have it. You live in Greece. You don't live in a part of Greece.
The constitutional conservative within me, which, as I've said before,
leaves it to the states.
I'm very fond of the American Constitution. I believe it's one of the best ever written.
It used to be.
Completely abused over time via using the Supreme Court of the United States as the Trojan horse to do that. Actually, I remind you that only gave an extremely limited number of powers to to federal powers, and everything else should have been in the states. So theoretically speaking, what you're describing is, what should be done. Yeah, it's what should have been done. Now,
I don't know. We had to have the U.S. Army, right?
Theoretically speaking, everybody votes for governors as well. So, theoretically speaking, you need to make sure as a voter that, not only the president, but also the governors are, capable of doing what they're supposed to be doing.
Yeah. Okay.
So, it's not that I can resolve this problem for you.
Greece was better when it became Greece instead of Athens and Sparta.
Yeah.
That's a big conversation, actually.
We don't have time because Peter's here.
Yeah. On the other hand, I can easily explain and claim to you that the in essence, what ancient Greece has left behind on a global level, most of them were achieved when we had the so-called city states, right? When Athens was a separate entity, then Sparta, Thessalia, so on and so forth. So I'm not so sure about it.
Yeah.
Romans, of course, can claim the opposite through the Roman Empire, so that's a different example. But I don't think it's one excludes the possibility of happening and the other doesn't.
Okay, well, anyway, the US response has been lousy.
Having to do with numbers, I think
Blame
that's
all the
objective.
governors. Huh?
I think having to do with looking at the numbers, I think that's objectively the truth.
Yeah,
I mean,
it's
a
terrible.
numbers thing. And for our friend that wanted to know about platinum, I think that platinum is breaking out, as we were mentioning yesterday. You can see it here. Who do we have today? Peter who?
Peter
Because we have-
Campbell. Peter Campbell.
Okay. Is he here?
Yes, he is. He announced, and I haven't had Peter on for a while. So I think really couldn't ask for a better guy to cap off the year for us. So Peter, I'm going to
Okay.
get you.
Good. Give me, as you promote him, give me a few seconds, just
Sure.
literally seconds for a few highlights. Cable retesting the channel. That's one thing I wanted to talk about. Platinum is breaking out, so I would mention platinum in any case. Gold, silver haven't really done anything. Momentum still stalling here in crude and seeing divergences as well, so people should be careful. And dollar is still breaking down, so I think you shouldn't try to fade it at least yet. With the next downside area of support, nice confluence actually being at 88.30. So I wouldn't be surprised to see this move continue for the days forward. I don't think we should see any trend reversals within, in essence, the holidays, because we are in this like holiday period. We are in what's called the Santa Claus week, which traditionally is risk on, and as you understand, dollar negative. So keep that in mind, guys and girls.
Happy New Year, Steve.
Same
Happy
to
New
you,
Year,
Dale.
Stel.
Dale, by the way, so I can arrange for the webinars. When is our next webinar?
Monday.
Monday. Okay, good.
Yep.
Okay. So see you all on
Start the new
Monday.
year. Okay. All right,
Bye-bye.
Peter. Bye. Good job, Steve. You're one of the people I learned a lot from over the last 3 years. So
Thank you,
Peter,
Dale.
I'm going to get you set up.
I'm here.
I see you, Peter. Great to
Okay,
have you, bro.
Great to be back.
Can you share your screen, Peter?
I'm doing it right now.
All right, it's been way too long since
Yeah, it
I've
has
had
been.
you here.
Very nice show today, by the way. I
Thanks.
agree with the analysis. Also, I have some slightly different takes on things, which I think will be interesting as a point of discussion.
Okay.
But
So where are you in
think-
Europe right now, Peter?
I'm in Munich right now.
Okay.
Now I don't know if the screen has come up yet. Did it come up?
Yeah, but it's just you are
Okay.
sharing screen, share device.
So
there you go.
There you go.
Right.
You're in Munich,
So-
but you're not German.
No. I
Yeah, because
actually grew up here.
your accent definitely isn't German.
No, my accent is no longer German, but I grew up here from like 6 years old till 12. And when I came back to the United States, I had a little bit of a German accent. I lived in England before that, so I had a combination of being a kid with an English accent and a little bit of a German
Wow.
accent.
I
And,
love, by the way, the Munich museum. I
Yeah.
love it. It's amazing.
Munich's one of my favorite places in Germany
Yeah,
too.
I love it as well. Plus, I'm a big fan of Bayern Munich.
Yep. So, but anyway, I think that the discussion you guys are having about the dollar is incredibly interesting and very important. I don't know if you've been following my comments about the dollar over the last month and a half, but basically my view of it when the dollar failed to hold a potential breakout earlier in the year, there was a small descending diagonal, contracting diagonal that it broke out of and then failed,
Right.
was that we would go and make a larger diagonal. I'm going to actually go straight to that chart. And here's this chart. So you're going to have to, because I'm going through, I wanted to go through a discussion I had on Twitter on the MCM CT Markets stream, which is for members at MCM. And basically, because there's so much covered in there, I thought I'd go through it, but I can't really mark up the chart. So I'm going to have to talk through it, but they've got good markings on them.
That'll work,
But
bro.
you can see on the on this chart, there's descending contracting diagonal that went into, let's say,
Actually, Peter,
August, September.
Sorry to interrupt, but just to give you an idea, there is the ability to use marking tools from Zoom if you want on the screen.
Okay, let's see. Where is that?
On top, it has a drop-down menu. I don't remember exactly how.
But I'm on my iPad, so that's the problem.
Okay.
Okay.
So
Okay.
I
Don't
think
worry
it's
about it.
going to limit me there.
Yeah, go ahead.
I have to figure. There's got to be a way
Thanks.
to do it. But I will have some charts I will mark up, but not the ones that are on the Twitter.
So Peter, are you saying we have to re-enter this, I call it a falling wedge, get back inside the line over, what, 90?
Well, this is
Take it back inside.
Well, but I want to actually take a look at what happened in August, because this was a classic and beautiful setup where we should have broken out over 93 and then rocketed.
Right.
But what happened is when we broke down the breakout level, we formed a larger contracting diagonal or wedge, as it were. I don't like using the word wedge because wedges don't have to, just for me personally, wedges don't have to have like a certain technical setup, but a contracting diagonal for me has to have 5 waves in it constructed in a certain way.
Would you, let me ask you this, Peter, you know I like you, but would you consider yourself to be a bit of a technical analyst?
I don't know. Sometimes I am. I go through phases where I am, and I go through other phases where I'm like in August, I was looking more broadly at the market rather than more detailed technically. And I have decided since then that I keep it to, my normal timeframes, which are
I
1 to 5
was
days.
just really kidding around with you, but I have noticed that if I post something and it's not in line with people's definitions, that I'm always corrected. And I'm not as anal.
A wedge is an awesome thing.
Oh, no, I wasn't. I was just talking about how it is out there in the Twitter sphere and stuff. Yeah. Doesn't matter what you call it if you know how to trade it.
Exactly. And I think this dollar situation is just an exceptional emotional catalyst, and I think that's the focus of this. What I wanted to talk about today. Basically, we have in August, if you look at it, where I have this little gray box. I wish I could click on it, but I can actually zoom. You can see right there. That's the throw under from that. Wedge. And if you look at that, that took about a month and a half to go through. Now, my experience with the dollar, having still the most money I've made trading in terms of percentage has been trading the dollar. Generally, like for example, I took enormous long trades when the dollar was in the lower 70s and held them until it was in the 90s.
Great hold.
And people thought I was nuts when I took the longs because the United States had just been downgraded, I believe, or something happened around that. But the thing is that I think the dollar is the driver of a lot of stuff going on right now. And I think that if you look at what happened here, and then you recognize that we have an even larger contracting.
It's like that was a fractal of this.
Yeah, that it's to me, the dollar doesn't want to just drop below this emotional area and then reverse. It wants to torture people. It wants to make people think that the dollar is weaker than it is, or it wants to make people think that it's going to reverse and break out. And either one of those situations is where the emotional reaction is going to be. So I rendered it here. What I'm leaning towards is not necessarily consensus, because what I think is a lot of people are talking about the dollar going down and breaking down and losing reserve status immediately and all this stuff. And I agree with what you guys were saying earlier, because what it looks like to me is we have this torture maybe into March or later February. And
Grinding lower?
then the
Yeah.
dollar breaks out. Now, the thing is that you have to look at what the measured move would be here. And the measured move, if we broke out, would be to something like, 98 on the dollar. However, if this is a leading diagonal, which you can't rule out, then we would see an attempt to break back into this contracting diagonal and fail. And that is this red line right here. So if that was to happen, then we're probably looking at a double whammy. We're looking at two things. I'm going to go back to this chart. We would be looking at a potential for a blow off top, similar to this. Although
Yeah.
for me, I actually think that the underthrow on the dollar is likely to produce some sort of decent momentum higher in the market regardless. But if we were to get the leading diagonal, which is very bearish, then that would look at the dollar dropping into the middle 80s or lower 80s. I am not biased towards that. I think that it could be even lower than that. But I'm not biased towards that. I'm biased towards the market, to the dollar, basically stretching people, making them, I'll go back to this again, because you can see where it is, basically staying in the upper 80s. That's
Okay.
what I think will happen. 86, 87, 88, anywhere in there. And that goes with the picture here. I think we could get something like this.
A
And this,
correction to 3,400 while we have a bear market rally in the dollar.
well, no, because this is where we are now. I posted these charts last week,
Yeah.
and basically looking for chop into the end of the year. So if you look at this, you can see here we are. The
Yeah.
green line is the
Right.
end of December. Looking for the market to spike up, drop a little bit potentially into the last 2 days. The last 2 days of the year are a little bit complicated, especially towards the end of the day, because there's liquidations and rebalances and other things that are happening. And the market doesn't behave very technically. The one thing I do want to say is that at between 345 and 435 on the futures on the last trading day of the year, some really wacky things can happen. And so you should be careful of those times. It's kind of like a quad witching type of close, except there's no quad witching. It's just the annual influences. But I think we've already pretty much proven to me that this red option for the dollar, for the S&P immediately pulling back, is probably not likely. I don't see that as having the edge right now. It's not ruled out yet. We need to see how we open in January, but I don't really give it high odds. And the reason is some charts I'm going to show, some live
Okay,
charts.
so
I'm gonna
this
show later.
dollar decline continues, Peter, and we continue to grind higher in S&Ps until
Yeah, I
February,
think-
March, till we get a dollar low.
I think if we remember what happened in this August timeframe, remember we
Yeah.
had the strongest blow off top in the market that I've ever seen in August, while the dollar was just chopping around.
Did nothing. Yeah.
Yeah, the dollar just chopped around in this emotional thing, convincing everybody that it was going to fall out of bed and die, and the market was going to go up even more. And now I would guess we're in a similar situation. That's and I've been talking about this for a long time, because my experience with the dollar is that these throw unders are the magnets. They're the magnets where they can trap the most people. I think the central banks know it. They're involved. They're manipulating this stuff. And I think that they want to get many people in. Now, I'm going to show my comments on here because they're important. Basically, the Nikkei has also done something which I think leads to the idea that further follow through upside for the market is probably likely, and that's broken out of this huge channel. Now, I can't tell you where this stops. I drew one option of where I think it could stop, which would be about 10% higher than where we are, well, where it was when I made this chart. But that can go higher. I'm more inclined to be bearish than bullish in the broader picture, but in the short term, I think it pays to be careful. So the NYSE has a very interesting setup in that regard, and also the transports, because basically I track these 1, 2, 3 setups, which I have been posting about for a long time. And usually I don't track them where they're just on a trend line or something, but 3 is a magic number, as people know, in terms of trading. And what it looks like to me is that we're looking at the market potentially getting a last squeeze here into resistance and a hammer where we'll get proper unconfirmed highs. And that's something I've been harping on. Now, another clue for this, something I've been talking about for a long time, I'll just read it. Here's the transportation index. And I've been posting this for months. And I would expect that it's a similar 1, 2, 3 hammer as the NYSE. So we have 1 and 2, which were nice resistances. And this looks like, again, a contracting, rising diagonal with a false breakdown. Now, we had a breakdown over here in 2018. Then we had a real breakdown in March that also now has proven to be a false breakdown. I think the ultimate trap would be that the transports view all of this euphoria about everybody moving online and closing down, the closing down of all the small businesses and, retail stores, that not all of them, but at least so many of them, sadly, and consolidating power into the online markets would increase the transport's performance. And I think one of the things that's going on here is that the confirmation of transports is a misnomer, where it used to be, a Dow theory, Dow theory buy would have triggered right now. I don't agree with that, because we have a gross manipulation of the actual mechanisms of business in terms of bankrupting certain businesses and reducing hand-to-hand commerce. So now everything is shipping, and I think it's distortion, as opposed to where a lot of things were hands-on before. So let's take a look at something else. Now, you're going to see that a lot of people are talking about sentiment being overly euphoric. And I'm not going to argue with you that we don't have euphoria. We do have euphoria. But let's ask the question, is a low put call ratio bearish? And the answer is yes and no. Initially, a low put call ratio with a new market high is not bearish. It might get a consolidation or a pullback, but what tends to happen is this means that, in my opinion, there is a lot of emotion that is behind the movements in the market, and people are committed to it, or there's a technical mechanism or some sort of a gamma problem that is going to create momentum in that direction. It's when you get the divergences after the new high. So I'm not going to look at that one because that's not a new high, but let's look at, here we have new market highs. And if you look at the second arrow there, and even the first arrow, these were new market highs with lows in put call ratio, and they led to follow through.
Yeah.
Where we started to see problems is when you get two, I like symmetry in markets. So you get two new lows in a move in put call. So you would look for two unconfirmed highs, two major unconfirmed highs, or three, for example, to get into the zone of where the market will turn. You can see that this green arrow is what we got from this supposedly extreme euphoria. And then if you really look at what happened here, you can see that we had basically 2 or 3 unconfirmed highs in that were significant in the put call ratio. Now let's look at where we are now. We have in February, we had a similar situation. We had, in February, in December to the end of December to February, we had extreme low put call ratios. And that, of course, in the long term was a negative. But in the short term, it led to higher prices. Now we have a much more pronounced situation where we're dwarfing the put call lows, which I think then ends up meaning that ultimately the decline the markets take from here will probably be a bear market. But in the meantime, it means that the momentum for the market to go higher is probably something technical, something systemic or systematic as well. And systemic, I mean systemic, not so something methodology-wise has changed in the market, or the market system has changed, or we have strategies that are
Driving
going to
it.
continue this momentum, whether
Yeah.
it's gamma squeezes or whatever. But I think something like this is potential to keep an eye on. Certainly an open mind for the markets to go higher. Now, if we look at a very long-term chart of the Dow, we can see that we're up in the top of this broadening pattern. But we still have room to go. So I've been talking about 31,000, 31,200 for a while. If you look at a close-up here, you can see that there's still quite a bit to go. Since this is a monthly chart, then it should be not discounted that space is not small.
Yeah. And could we have a throw over on that?
I would think that we could at least get some sort of throw over.
Okay.
I'm not.
That'd be higher than 31,000 then, wouldn't it?
Yeah, I'm kind of looking at it like 10%, 7 to 10% on the NYSE.
Yeah.
So, we could see from where we are basically, 31,000 to 32,000 on the Dow if it wanted to. And here's another very interesting broad trend line that goes back 100 years on the Dow, I think is worth taking a look at. And if we zoom in, you can see there's still some room up there. It's also in the 31,500 to 30, area.
Thanks
now
for taking me back to my childhood.
Yeah.
Go ahead, buddy.
Now, if we look at the S&P, I've been talking about this for a while also, because my expectation was, because we didn't have unconfirmed highs when we hit this resistance level, which is a key one in the S&P, that we would get a throw over. And the throwovers tend to be that first they throw over a little bit and create a little bit of a bull trap. And then they create a bear trap because everybody thinks it's broken down. Like here, you can see we got a bear trap. Now, right over here, the last highs that were a gap up and failed, that was a bear trap. But now we are in what would normally be the momentum phase of a throw over, which means that we should get about 3 to 5% normally above that line, I would say, in order to really create a full trap, just like what was happening in the October through December, January timeframe in 2020. So October 2019 to January 2020 was a throw over.
So is that about 3,900, Peter? 5% from here?
I think 3,850 to 3,900 is a reasonable area. If we get a little momentum and the dollar does what I think it might, then we could see 4,000 to 4,100, as crazy as that sounds.
That's not crazy. A lot of people had those targets, but they were looking for a 10% correction first.
Yeah, I don't think we're going to get a 10% correction, and I'll show you
until
why.
It's over.
Yeah, I think that this is a trap setting up. I think we might, there's timing here, January 6th or 9th for a pullback. But I don't think that we're going to get a really big correction because really the medium term, people are too bearish. And I'm going to show you that. You can't believe that people are too bearish, but they are. This is the euro. I love this chart. This is a very long channel. I think the euro has room to the top of this channel. It might noodle around. It might even do false breakout. But I think that there are big consequences for the euro after this. The euro is actually, the ECB is printing more money than the Fed. And everybody is borrowing as many dollars as possible through swap lines. So the squeeze in the dollar has potential to be devastating when it happens. Now, the all-world Dow also gives us a clue that we have resistance coming up here that is got some more room to go. These are nice looking charts in terms of that they're clean. And I think that it's unlikely the market doesn't attempt to get at least a better test of that red line, in my opinion. That fits with this pattern I've been talking about for quite a while, though I was looking for and still am looking for an overthrow for E, and that throw over can become interesting, or it could become even a sort of leading diagonal, which could then get us a momentum move. I'm not that bullish. I think the markets are very dangerous. I think people need to be taking smaller and smaller positions and managing risk tighter and tighter as market goes up. I think this chart is a great example of why. This is not a normal looking chart. This is the NASDAQ, basically since 2000. And if you look at the blow off in 2000, this is what people thought was a crazy chart. But then if we look at since there, this is what we're looking at now.
Crazy magnitude by 10.
Yeah, exactly. It's a linear chart, but it's important to have it for perspective. Now, since my work is based around sentiment, I want to discuss this because we have in this area right here where this red dot is and these green lines are, we have what's called confirmed highs. We have extreme extreme euphoria with extreme prices. Now, that's not a negative. What do you look for when you get emotions matching prices? You look for maybe a pullback or consolidation, and you look for the market to come and make prices that do not have the same amount of euphoria, showing that the market's fractured or showing that commitment is waning. So normally, if you have a situation like this, we need to get two unconfirmed highs in order to, on this panic euphoria index, in order to actually get a top in, which is why I don't see how this market really tops before February. I think we're looking at middle February, March, but I'm ready to hit the button at any point. I think it pays to have an open mind and to be vigilant and to not trade like you have to get this last piece of the market move. In my opinion, take smaller trades, take them at places where they're lower risk. Take your 20 points or 40 points or even 10, whatever it is, and put stops in once you get it, and don't bet the farm. But I would be looking for fully unconfirmed highs, which are either this second options expiration. Now, that's something I want to point out. If you look, quad witch
March expirations you're talking about, then, right?
Quad witch over here turns to be a general kind of sea change for the market. It traps people and it engineers them into structural trap. So people who go into quad witch wrong and then get stuck with positions in settlement try to work them out, and it takes sometimes two options expirations for them to fully unwind, and that's each one of these yellow gold dots is an options expiration. So you'll see here's quad witch, two expirations, pullback. So now, is this two expiration situation coming up going to be a major top, or is it going to be a pullback? Well, I would say I'm open to a February or March high in either case. I'm even open to a January high. But I think.
How about April? I hear April bandied about a lot.
I don't think.
Or maybe around the spring equinox.
It could be, but I'm thinking Q1 high.
Okay,
that's what I think.
All right.
The emotions are too distended right now, so I'll show you why.
I could see that.
Yeah. So this was the Russell chart I proposed last week, and basically was looking for a day or two higher, and then the market to consolidate a little bit and then make a higher high. I didn't try to be super accurate with this prediction because that wasn't the goal. The goal was to show that markets don't top like this.
Yeah.
So what we're going to have is at least some sort of consolidation and another test higher, I would imagine. I don't see how this just ends right now. Which goes
takes time to turn a battleship around, bro.
Yeah, exactly. This is the geometrics chart, which is saying something similar. Over this green resistance line, we're probably looking pretty quickly, as you can see, I was correct about this, into setting up a larger resistance of around 3780. And I think we probably get that near term, then get a pullback, 3780, 3800, somewhere in January. Then we get a pullback. I don't know whether it's 80 points, 100, 150, I don't know. But then we get a pullback and we see what happens from there. Markets are opening. I apologize for this. The other thing here is that we have this is a VIX analysis that I put together. And in order to get a top, we need to see some disagreement in markets, and we need to see the VIX showing that that volatilities, it's not just VIX, this is volatility as a whole, is showing like sort of at least a few stresses, and we haven't seen that yet. So we need to see that. I think it's going to take at least till January to get something like that going.
Okay.
And I want to show you something else. Gamma squeeze is something to worry about. This is a great chart. This is a look at skew. It's not a great chart because I made it. It's a great chart because it's a great data set. Basically, when people are trading out of the money options to this degree, they're betting and they believe in the options too much. That's why they're trading the out of the money options, and they tend to be taken out. So if you look at what happens when people basically end up offsides in out of the money options this far, they end up having these green boxes, basically unwinding their options and turning them into dust. And these tend to be gamma squeezes. So it looks like we're in another one right now. People are way too confident, as you can see, with their out of the money options. We need to get them more confident and then unwind them from them, in my opinion, for zero. And then the market will take a break. This is another confirmation of what I'm seeing in this sense, which is that we're probably looking at a situation where we need to get a few unconfirmed highs here, still again pointing into January, February, or maybe early March for timing. I would say, in sentiment-wise, this is credit sentiment on the bottom, and credit sentiment is a relationship of sentiment and credit to the relationship in sentiment of equities. And then the top line is composite sentiment, which, as you can see, shows euphoria, but you don't top on euphoria. You might get a pullback, but in this particular case, because this is new all-time highs with new multi-year highs in composite sentiment, we're going to need to get unconfirmed highs, at least a few of them, in order to unwind this market. From a valuation perspective, just looking at this makes you want to puke, because this is the most expensive the market has ever been versus earnings. I don't see these earnings going to be ratcheted up. I think they're going to be ratcheted down. Inflation is probably going to be a negative impact. And inflation initially might push markets a little higher, but when markets start to factor in that inflation is disturbing the business process, they will have a problem. On the subject of PE, you can see right now the present PE on the S&P is 37. It's insane. Okay. Now, the last time this kind of happened, we were in the midst of the S&P going down to zero earnings or negative earnings in 2008 and 9. Here we are, we have positive earnings, but an insane valuation. In that point, we have the NASDAQ with the highest ratio to GDP in history. There's another chart I think is interesting here. Just I don't tend to use RSI, but I like to sometimes use channeling in RSI. And you can see we have a channel to hit on the RSI. I can't imagine we don't hit it at this point. We've come back too far, so I think that wants to be hit, which probably means an upper trend line needs to be hit or a throw over on the S&P. I'm sorry I'm going long. I'm trying to go fast here. This is a tool that like to watch, and it's already way oversold with the markets at all-time high. It's not oversold. What this means is that we're just not seeing sellers get control of price, and that means that we continue to see squeezes. In terms of volatility, this is projected volatility, so it looks like a Q1 volatility low to me.
Yeah.
And then we turn up for the rest of the year. Actually, for 2 years, 2.5 years. So bear market type thing.
Wow.
Value stocks are starting to break out and increase their performance versus the S&P. I think that's notable.
Yeah.
We're getting internal confirmation right now in the market. I don't think that we turn until we start to get non-confirmations, kind of like this. But I don't see how the market is going to just sit and turn when people are doing this. Similarly, McClellan summations, I like to look at all of them. We're getting broadly confirmed highs here in McClellan for the rally off the March lows, in terms of some of the McClellans, and some of them are not, but it's still overall leaning positive to me, more positive than more negative, just because of the number that are confirming the highs for the near terms. Now, this is not a wonderful picture. There's fracturing in here. So the quality of what's going on in the market to me is deteriorating, which means that the next highs we make are likely to be not as strong, not as long lasting as people might want them to be. Let's take
What
a
a great
look.
presentation, man.
Let's take a look at this. Was something else that was going on last week. We actually have, if you look at it right here, people panicking with the S&P having pulled back just a few points.
Yeah.
And so, of course, we get these squeezes. And this is a count. Now, I don't like standard Elliott wave in a lot of ways, because I think people are always looking to count impulses more than they should. And all of the moves that I'm seeing since 2000 look like ABCs. So I have done this count. I've had this for years that I posted it. And what it looks like to me is that we need to finish the C wave up. And it can be a truncated C wave, or it could be symmetrical. I don't think it's going to be symmetrical, but I think we need to finish this C of C. And then we could basically come down and make lows below March, which I think we would do if we start to sell off. This is just a look at the NASI. Of course, we got confirmed highs here, so I don't see an immediate need for markets to die. And you can see also, just in terms of sentiment, even though I don't really like AAI bear and bull, still, when you make new lows in bears, it doesn't mean that there's not people left to squeeze, and it doesn't mean people aren't convinced that the market's going to go higher and they have to get that last 10%. So it looks to me like we're in a similar situation as December 2019. So you have to be vigilant, and we might have 1, 2, or even 2.5 months left, but important to understand that. This is the last chart I'm going to show that's about sentiment, which shows you why people are mismatched. Essentially, index put buyers are going nuts. They're buying more puts right now than they bought in March. That's this purple line on here. So that's why when you see me talking about people being too bullish or too bearish, these people are off sides. And this is a big number. These are professionals. The index put people are not like retail people. They're institutions, and they're offsides, and they're options expiration quad witch trap people. This is the Dow Jones Global Titans Index testing resistance, a beautiful trend line. I wouldn't be surprised to see a little throw over and then a failure. So Q1 type thing. Mortgages, really interesting situation in mortgages. Mortgages has broken resistance. Now, what would I think is happening here? I don't understand it at all, but it looks to me like we're looking like we want to get up and test into that gap area and then potentially roll. I'm rushing through this. You can also see that we're seeing rates real rates rise a little bit versus the Fed trying to get them down.
Yeah.
And one of the last subjects is lumber. Lumber is been this inflation gauge. It's an awesome one. I'd never seen a move like this, limit up after limit up after limit up into August. I'd never seen anything like August in my life. But we did get a major reversal there. Now we're back up here consolidating just under the highs. This was as of last week. I don't think this is a double top at this point. I think this needs to go higher in order to get the double top in there. And if that's the case, this is another tailwind for markets. And another thing you can see is comparing the wood index to lumber, it's actually confirming if lumber was to make a new high, it would now be in agreement with it, which it was not in August. So that's an interesting note. And then this is the last chart, S&P 500 to GDP, the highest of all time. So danger, 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 but still sentiment. Yeah. But, you know, so that's sort of my
Peter,
take on these things.
What a great way to end the year. One of the best presentations of 2020, I have to hand to you. Really, and insightful with things for us to think about over the holidays. Gives us plenty of time to prepare for potential shifts. The community, my partners, my teammates, everyone here at FaZe, thanks you for edifying us today. Wish you and your family a happy new year, and may 2021 be, you know, filled with a flood of pips coming your way.
Yeah, I hope so. Now, I have one more chart I want to discuss with you. It's just a very quick chart.
That's your tagline now. You know, I have a tagline for you.
Yeah.
One more chart. Peter, go ahead.
I'm sorry.
Go ahead,
it's
man.
This chart. This, if you see on the bottom of this chart, I'll zoom up there. This is live. This is actual market right now on the Tick Tools live stream. This is real-time market emotions, 24 hours a day or 23 hours a day or so. And what you can see is that right here in this area, we went to basically extreme optimism here in time with these little sell zones up there. Now, the problem with this is that this needs fully unconfirmed highs in order to see the market make a top. So that means that on this time frame, we're going to need to see another high. Now we have a bigger problem, however, because that's the minimum requirement. We had a little bit of an unconfirmed high. If you look at it here, you can see we made the highs here, and then when we came over to here, where we are, I'm just zooming here, you can see that was a lower high in terms of sentiment. But the problem is, look how fast this has dropped. We're almost back in a pessimism area where the market usually would have dropped 120 to 180 points. And all we did was pull back about 30 points. Yeah. So we have as much pessimism. People are shorting this like with abandon. They're trying to sell, and they're not getting any price performance for their efforts.
Yeah.
So the market's going to squeeze them to hell and high water if this is correct. Now, if you look at this, every time you get medium-term pessimism at this level, don't expect a small move. Anytime you get intermediate-term pessimism at a level that is this green level, this green dot there, expect 100 to 150 points. So here we almost had that yesterday. We were like intermediate-term pessimism right here, got down into the 20s. Mm-hmm. Unbelievable on a 30-point pullback. Yeah. So when people are talking about how euphoric everybody is, well, just remember that what they're really doing is selling the crap out of every low, sorry for swearing. And you can see that again this morning. This morning, right out of the gate, first thing, people get extremely pessimistic and they can't even get a lower low. So we have a higher low, and we're basically, this was a low earlier this morning, like overnight. And now here's our opening low. And we had more negativity
Yeah,
But it
yen's
still looks like
breaking
we
down.
need some
Yeah.
more time. And that's only likely in this case, in my opinion, to develop a short-term pullback, not necessarily the top. I think we need more work to do the top. Anyway, I'm done now.
All right, well,
So-
Peter, I want to thank you, and the best way for people to follow you, you have a private Twitter feed, how they get a hold of you.
People can follow me at MCM_CT. And I apologize that I've been posting a lot of stuff related to coronavirus because data is kind of so bad on that. I'm a data scientist, so I hunt down bad data. And it bothers me what's going on there. But my markets only feed is private, is for members. If you go to MCM_CT_markets, at the top of there, you get at the top of the profile, you can click on a link and you can join by going to that page, and then you'll become part of that feed. And you could also just go to the MCM-CT.com, which is the website.
Okay, you have a website too. Okay, Peter. Really, thank you so much. I mean, what a great way to cap off the year. So many nuggets and food for thought. Thank you for edifying our community face today, Peter.
Okay,
Appreciate
great.
it.
It's great to be here. You guys are, great. You have integrity, honesty, and I really respect what you guys do.
Well, back at you, my trading warrior brother. Happy New Year,
Okay.
Peter.
Thank you. Happy New Year to everybody too.
All right.
Bye.
Okay, so that's a wrap, everyone. So, have a nice new year. Think about your blessings this new year, and maybe think about what you may want to change. Also, be gentle with yourself as a self-critic. Focus on what you've done right and what you've accomplished this year and build upon that foundation. And with that being said, Happy New Year, everyone. We'll see you guys next Monday. Peter, great job. And
Thank you.
Okay, so everyone loved it. If you see the chat, got a lot of people that really enjoyed the presentation. So that's a wrap, everyone. See you in 2021. Adios.
Okay. Catch you later. Bye.
See you, buddy.